The US dollar has long reigned supreme in global finance, serving as the backbone of international monetary transactions. From international trade to oil pricing, the dollar's dominance is undeniable, influencing global markets and economies. However, the US-China trade war has exposed the vulnerabilities of this dependence, particularly for China, which has felt the brunt of economic pressures. Beijing is acutely aware of the risks associated with relying heavily on a currency controlled by a geopolitical rival, understanding the strategic disadvantages it poses. This realization has fueled China's cautious but determined pursuit of de-dollarization, aiming to mitigate these risks. China's motivation is clear: reduce its vulnerability to US economic pressure and gain more control over its financial destiny. The trade war, characterized by tariffs and sanctions, has highlighted how the US can leverage the dollar's dominance to exert influence. This power play has accelerated China's search for financial alternatives, pushing for innovations in payment systems and financial technologies. The goal is not to topple the dollar, but to create a more multipolar financial system where multiple currencies share the stage. This system would provide China with greater autonomy and resilience in the face of geopolitical tensions, allowing for more strategic flexibility. The path to de-dollarization is complex, involving significant financial reforms and strategic planning, but China is taking calculated steps to achieve its objectives, aiming for a more balanced global financial landscape. De-dollarization, in its simplest form, is reducing reliance on the US dollar. This can manifest in several ways, including using alternative currencies for trade and financial transactions. It also involves shifting away from dollar-denominated assets like US Treasury bonds. In the context of international trade, de-dollarization means promoting other currencies for payments and settlements. This shift can involve bilateral agreements between countries to use their respective currencies. For instance, China and Russia have increasingly used their currencies for bilateral trade. De-dollarization is significant because it challenges the dollar's hegemony. The dollar's dominance has afforded the US significant economic and political leverage. This influence is particularly potent in international institutions like the International Monetary Fund, where voting power is linked to a country's economic size and currency reserves. China's central bank, the People's Bank of China, has been carefully managing the yuan's exchange rate for years, ensuring stability in the financial markets. Unlike freely floating currencies, the yuan's value is allowed to fluctuate within a narrow band set by the People's Bank of China, providing a controlled environment for currency trading. This approach gives China more control over its currency's value and helps mitigate volatility, which is crucial for maintaining economic stability in a rapidly changing global market. The People's Bank of China's intervention in currency markets aims to prevent sharp fluctuations in the yuan's value, ensuring a more predictable economic environment. Sudden depreciations could trigger capital flight, undermining financial stability and causing widespread economic disruption. However, China also recognizes the importance of allowing the yuan to gradually appreciate, reflecting the country's growing economic strength. A stronger yuan makes imports cheaper, helping to control inflation and benefiting Chinese consumers by lowering the cost of foreign goods. China has also taken steps to reduce its reliance on dollar-denominated assets, diversifying its investments to spread risk. For years, China was the largest foreign holder of US Treasury bonds, a position that gave it significant influence in global financial markets. However, in recent years, China has gradually reduced its holdings, reflecting a strategic shift in its economic policy. This strategic move is partly driven by a desire to diversify its foreign exchange reserves and reduce exposure to the US economy, ensuring greater financial security and stability for the future. A cornerstone of China's de-dollarization strategy is diversifying its foreign exchange reserves. These reserves, comprising foreign currencies and gold, act as a financial safety net. China has been steadily increasing its gold reserves, viewing the precious metal as a safe haven asset. Beyond gold, China has been accumulating reserves of other major currencies. The euro, Japanese yen, and British pound are all part of China's diversification strategy. This approach reduces China's reliance on any single currency, spreading the risk and enhancing financial stability. Furthermore, China has been encouraging the use of the yuan in international trade and investment. The establishment of the cross-border interbank payment system provides an alternative to the SWIFT system, traditionally dominated by the US dollar. Section 5. Expanding global ties, reducing dollar dependency. China is actively strengthening trade relationships with countries worldwide, aiming to create a more balanced and diversified global trade network. This strategy is designed to reduce dependence on Western markets, and by extension, the US dollar, which has long dominated international trade. The Belt and Road Initiative, or BRI, a massive infrastructure development project, is a prime example of China's global outreach and ambition. The BRI involves investing in infrastructure projects in developing countries across Asia, Africa, and Europe, creating new trade routes and economic opportunities. These projects, often financed in Yuan or local currencies, promote the use of alternatives to the dollar, thereby reducing the global financial system's reliance on the US currency. This approach simultaneously strengthens China's economic ties with other nations and reduces reliance on the US-led financial system, fostering a more multipolar world economy. In addition to the BRI, China is also forging closer economic partnerships with regional powers, enhancing its influence in the global market. The Regional Comprehensive Economic Partnership, or RCEP, the world's largest trade bloc, is a testament to China's commitment to regional integration and economic collaboration. RCEP, which includes many Asian-Pacific nations, aims to boost trade and investment using a basket of currencies, reducing the dominance of the dollar and encouraging a more diverse economic landscape. Section 6. The Digital Yuan, a new contender. China is at the forefront of developing a central bank digital currency, the digital yuan. Unlike cryptocurrencies like Bitcoin, which are decentralized, the digital yuan is issued and controlled by the People's Bank of China, or PBOC. While still in its early stages, the digital yuan has the potential to challenge the dollar's dominance. The digital yuan offers several potential advantages. It could make cross-border transactions faster and cheaper, reducing reliance on the SWIFT system. Moreover, the digital yuan's traceability could enhance transparency and combat illicit financial flows. While the digital yuan is not explicitly designed to replace the dollar, its emergence could gradually shift the balance of power in the global financial system. If adopted widely, the digital yuan could provide an alternative to the dollar for international trade and investment. Section 7. Challenges and risks, navigating uncertain waters. China's de-dollarization journey is not without its challenges. The dollar's deep entrenchment in the global financial system will not be easily undone. The US dollar remains the world's reserve currency, underpinned by the size and stability of the US economy. One significant challenge is the yuan's limited convertibility. Unlike the dollar, the yuan is not fully convertible on international markets. This restriction hinders its ability to function as a true global currency. China is gradually easing capital controls but remains cautious of potential financial instability. Another risk is the potential for retaliation from the United States. The US could perceive China's de-dollarization efforts as a threat to its economic and geopolitical interests. This perception could lead to further trade tensions or even attempts to undermine China's efforts. Section 8. Conclusion, a cautious path to financial autonomy. China's de-dollarization strategy is a long-term endeavor. It involves a delicate balancing act, reducing dependence on the dollar without causing significant disruptions to the global financial system. China's approach is characterized by caution and gradualism, recognizing the complexity of the task at hand. The ultimate goal is not to replace the dollar but to create a more multipolar financial world. This system would provide China with greater autonomy and resilience in an increasingly uncertain geopolitical landscape. The success of China's de-dollarization strategy remains to be seen, but its efforts signal a potential shift in the balance of power in the global economy.